delay. So the topic I want to discuss today is relating to introduction to taxation. So I will start by introducing tax. This is an advanced taxation class, but in accordance with our syllabus, we are asked that we should introduce tax first because some of the students that is writing advanced tax in their skill level, some of them are exempted. So that is the reason why we need to discuss introduction to taxation first. Introduction to taxation cover 5% of our syllabus. So are you with me, students? Hello?
Yes, yes,
Yes,
I am
we
with
are
you.
with you, sir. Proceed, sir.
Okay. So I will start with what is taxations. As we all know, taxation is a compulsory levy imposed by government on its citizen for economic growth and development. So what we mean by that is taxation is very compulsory. So far as we are earning an income, you must pay what? Tax. You must pay tax because taxation is imposed by government. Why government impose tax is to ensure that there is economic growth and what? Development. There is economic growth and development. So that is the reason why government impose tax. So apart from that, what is the objective of taxation? Why do we collect tax? We all know that number one objective of taxation is to generate revenue for government, is to generate revenue for government. Tax will generate revenue for government so that government can use it for infrastructure development. So that is the thing. So tax will generate revenue for government. Apart from that, another objective of taxation is to redistribution of income and wealth. One of the responsibility of government is to ensure that there is income redistribution. How do we ensure income redistribution? By ensuring that the gap between the rich and the poor is minimal through empowerment, by ensuring that we empower the lower income level earner. So by creating enabling environment for them. So is one of the objective of taxation, redistribution of income and wealth. So apart from that, another objective of taxation is to discourage consumption of harmful goods. We can use tax to discourage consumption of harmful goods like alcohol, cigarettes, and tobaccos. Tax can use to discourage it. How? Government will increase the custom duties, import duty on such kind of good, so that the price of such kind of good will be increased and it will discourage people from buying it. The demand for such good will reduce because the good is harmful to our health. So tax can use it to discourage consumption of harmful goods. Another objective of taxation is to protect domestic industries. Is to protect what? Domestic industries. Tax can protect domestic industry. What we mean by domestic industry means infant industries. Infant industry. Those industries that are still growing. Those industries that are still growing. Do you understand? So in some textbook, they are referred to local industries. How will tax protect the local industries or infant industry? By giving them tax incentive. We give them tax incentive. We give them tax incentive that, okay, when you have a small example of that, Finance Act 2020 said small scale industry that their turnover is less than 25 million, 25 million below. They are exempted from paying company income tax, education tax. So is one of the means to protect infant industries because they are still growing. We don't need to boggle them with a lot of taxes. So that is one of the objective of taxation. So apart from that, we have another objective of taxation, which is to protect, to encourage exportations, to encourage exportations. Tax can be used to encourage exportation by increasing the import duties. Tax can be used to encourage exportation by increasing the import duties. So after that, we can move to sources of taxation law. Sources of taxation law. Sources of taxation law. These sources of
Sorry, sir,
taxation
can I
law.
quickly ask?
Yeah, you can ask your question.
Okay, for one of the objectives is to encourage infant industry for the organization or the companies, the baby companies that had revenue of 25 million and below, they are not expected to file for return. So I want to know for how long could that be? If they start a business for 2022 and they are still crawling till 2025, will the tax authority still permit them?
Yes. So it has started since 2020. Minimum tax, exception of tax for small scale industry. It has started since 2020 and up to now it's still running. So you understand? So what I'm is continuous. Is continuous, except there is a new finance act that now said, small company now, they are now expected to be paying company income tax. But right now, as I'm still talking to you, it's still continuous. So we are still applying it. Hello? Hello?
I'm with you, sir. I'm
Yeah.
with you.
Yeah,
I've
is
heard
your
you clearly.
question, I've answered your question now.
Yes, yes. Thank you so much. I appreciate you.
Yeah, welcome. Yeah. So let's move to sources of taxations law. Where do we derive taxations law? So sources of taxations. These sources of taxation is relating to histories of taxations. Do you understand? Is relating to histories of taxations. Histories of taxation. So where do we derive taxations law? Number one sources of taxations is constitutions. The 1999 Constitution of Nigeria law, some section of the constitution mentioned that tax is very compulsory. And this section, some like section 3 of the constitution, states the different kind of taxes that can be collected by each tiers of government. What kind of taxes can federal government collect? What kind of taxes can state government collect? What kind of taxes can local government collect? So it's stated in the constitutions of 1999. So that is number one sources of taxations. Another sources of taxation that we have is called statutory law. Statutory law. Statutory law. So statutes. So is another source of taxation. These are the law approved by the National Assembly. The law that was passed by the National Assembly. They are statutory law. Example of statutory law is Personal Income Tax Act, Company Income Tax Act, Value Added Tax Act, Finance Act, Capital Gain Tax Act. This law passed through the legislative arms of government. It passed through the legislative arms of government. So they are statutory law. The third sources of taxations law that we have is called case law. Case law. Case law. Case law. Some textbooks refer that as judicial precedent. The law that was passed through judgment by the judiciary, through judgment from the court of law, is called case law. We can derive tax law from that. Example of that is there is a case between SPDC versus FRS. So when Supreme Court made that judgment has become a law binding on FRS. And some other company like Shell, Chevron, can use that judgment as a case of reference when they are doing their filing tax return. Do you understand? They can use it as a case of reference because it has been, the Supreme Court have made the judgment and it has become the final law. It has become the final law. So that is that. Another example of case law, like as I can recall, is a case between British American School. It's a case between British American School and versus FRS. A case between British American School versus FRS. Let me just brief you the brief of the case. British American School was registered as a company limited by guarantee. Do you understand? They are registered as a company limited by guarantee. And according to the law, company limited by guarantee, they are not expected to pay tax. So, but British American School, when they established them, well, they were established in 1970s, and they registered them as a company limited by guarantee. In the long run, British American School become one of the most expensive school in Nigeria. So in 2007, FRS approached them that, you people, you need to be paying company income tax and education tax because you are deriving profit and you are making a lot of profit. And secondly, though you are registered as a company limited by guarantee, but the nature of your operation, which is for charitable organization, you are not doing that again. The people that are going to your school, they are high-level income earner. They are high-income earner. So they are not the lower income earner. So by virtue of that, you need to pay tax. British American School took the case to the tax appeal tribunal. They took the case to the tax appeal tribunal, and the tax appeal tribunal make a judgment that they agree with FRS that they need to be paying tax because they have go against their memo and article of association, which they are to provide charitable service. So British American School was not certified. They approached Federal High Court. After tax appeal tribunal, they approached Federal High Court. Same Federal High Court is in favor of FRS. After that, they approached Appeal Court. Appeal Court also in favor of FRS. Until Supreme Court, when they reached Supreme Court now gave the judgment in favor of British American School by saying that the FRS cannot prove beyond a reasonable doubt that British American School have go against the memo and article of association because based on the report that can be extracted from CAC, Corporate Affairs Commission, they are still registered as a company limited by guarantee, and the law that company limited by guarantee cannot pay tax. So British American School won the case at the Supreme Court. So as a result of that, for FRS, so other schools are now making that as a judiciary precedent that they will not pay tax. So what FRS have to do in such a case was of recent, Financial 2020, FRS now make it mandatory that either you are company limited by guarantee or you are company public limited company or you are private limited company. So far as you are earning profits and you are in educational institution, you need to pay company income tax and tax. So that is that. Apart from that, another sources of tax law that we have is budget speech. Budget speech. When president make a budget, when president sign budget into law, president can make some speech as relating to tax, such as national tax policy, that, oh, as from so day, there will be some new development in tax. It's part of the law. So that is that. So now, let's move to classification of taxations. Classification of taxations. How do we classify tax? How do we classify tax? Classification of taxation. Number one classification of taxation that we have is according to tax rates. According to tax rates. According to tax rates. We classify tax according to tax rate. Under according to tax rate, we have proportional tax system. Proportional tax system. This is a tax system in which the rates remain the same despite changes in income level. Either your income is increasing or decreasing, you are going to pay the same rates under proportional tax systems. So number two classification of tax under the tax rate is progressive tax. Progressive tax, which is otherwise called progressive tax system. It is a tax system whereby the tax rate increases as the income level increases. As your income level is increasing, your tax rate too is increasing. Example of a progressive tax system is personal income tax. As we can see from our study material, you can see the income personal income tax rate. As the income is increasing, the tax rate is increasing. Take for instance, first 300,000 will be taxed at the rate of 7%. Second 300,000 will also be taxed at the rate of 11%. Followed by the next 500,000 is going to be taxed at the rate of 15%. While the next 500,000 is going to be taxed at the rate of 19%. Followed by the next 1.6 million is going to be taxed at the rate of 21%. While anything above 3.2 million is going to be taxed at the rate of 24%. This tax rate is a progressive in nature. It's progressive because as your income is increasing, the tax rate is increasing. So regressive tax system is the third classification of tax under classification of tax according to tax rate. Regressive tax system. Regressive tax system is a tax system whereby the tax rate will decrease as your income is increasing. The tax rate will decrease as your income decreases. The tax rate increases as your income decreases. The tax rate is going to increase as your income decreases. So that is progressive tax system. Right now in Nigeria, we don't have progressive tax system. What we have in Nigeria is proportional tax system and progressive tax system. So are you with me, students? Are you with me?
We are with you, sir. Right on, sir.
Okay. Yeah. So the next classification of tax that we have is classification of tax according to incidence. Classification of tax according to incidence. We classify tax according to incidence. Tax can be classified according to incidence into two: direct tax and indirect tax. Direct tax and what? Indirect tax. Direct tax and indirect tax. What is direct tax? Direct tax are the taxes imposed on income of a taxpayer. Income derived by company, individual, corporate organizations, etc. The taxes imposed on such kind of income are called direct tax. We can break down direct tax into different types. Direct tax can be classified into different types. Number one type of direct tax we have is personal income tax. Personal income tax. Personal income tax are the taxes imposed on income that is derived by employee, sole proprietorship, partnership, artisan, professionals, trustees. So personal income tax is otherwise known as pay as you earn, which is payee. Pay as you earn, which is what? Payee. Me and you, one or two, we are working in a company. So our employer are mandated to deduct tax from our salaries that we earn every month. Such kind of tax deducted from our salaries is called personal income tax. Secondly, I'm a professional accountant. So I'm a tax consultant. I render service to different companies. So I also lectures. Such kind of the lecture I'm lecturing, I will be paid a professional fee. So the professional fee is due, the tax that will be deducted from the professional fee is called personal income tax because I'm an individual. So it's personal income tax. And I've gave you the rate of personal income tax. Like when I'm explaining progressive tax, 300,000, 7%, 300,000, 11%, 500,000, 15%, and so on like that is personal income tax. So second type of taxation under direct tax is called company income tax. Company income tax. As we all know, company income tax, they are the taxes imposed on profits or revenue derived by companies. Companies. What do we mean by company? Means private limited company, public limited company, either LTD or PLC. Anytime that they make a profit, they will pay company income tax. And let me explain more on this company income tax. In some textbooks, they are referred to tax imposed on profit derived by all companies operated in Nigeria, except upstream petroleum company. Except what? Upstream petroleum company. What we mean by that is upstream petroleum company, they are not expected to pay company income tax because they are expected to pay petroleum profit tax. Upstream petroleum company, they are like Chevron, Shell, Mobil, those companies that deal with extraction of crude oil. So they are upstream petroleum company. They are not expected to pay company income tax. They are expected to pay their own type of tax, which is called petroleum profit tax. But downstream petroleum company, like marketing and distribution of refinery products, all those filling stations, they are expected to pay company income tax. Do you understand? They are expected to pay company income tax. So what is the rate of company income tax? The rate of company income tax, according to Finance Act 2020, depends on the range of revenue, your range of turnover. The rate of company income tax depends on the range of your turnover, according to Finance Act 2020. Prior to Finance Act 2020, the rate of company income tax is proportional. But from 2020 to date, the rate of company income tax has become progressive because it depends on the range of your turnover. Proportional is at the rate of 30%, despite your level of profit. Despite your level of turnover, it's at the rate of 30%. But presently now, it depends on your turnover. If your turnover fall between 0 to 25 million, your rate of company income tax will be 0%. According to Finance Act, if your turnover is 0 to 25 million, you are referred as a small company. You are exempted from paying company income tax. Do we understand? Are you with me?
Yes, sir.
Yes,
Yes,
sir.
sir. We are with you, sir.
Okay. So, secondly, if your turnover is more than 25 million, up to 100 million, your company income tax rate is 20%. So that one is, according to Finance Act, they are called medium company. They are called what? Medium company. And if your turnover is more than 100 million naira, your company income tax rate is going to be at 30%. So that one is called large company. So what this one is implying that small company that their turnover is between 0 to 25 million, they are exempted from paying company income tax, but they are expected to file tax return. They are expected to file tax return and submit their audited accounts. They will file tax return and submit their audited accounts. So that is that. So number 3 type of direct tax we have is capital gain tax. Capital gain tax. Capital gain tax is a tax imposed on disposal of an asset. On disposal of asset. On disposal of asset. According to the law, they will say it's a tax imposed on disposal of chargeable assets. Chargeable asset. That chargeable asset is referring to fixed assets. But the reason why law refer it as chargeable asset is that there are some assets that are subjected to capital gain tax. Why some assets are exempted from capital gain tax? It's not all fixed assets that will be subjected to capital gain tax. There are some assets that are subjected to capital gain tax, while some assets are exempted from capital gain tax. Capital gain tax means tax that is imposed on gains derived from disposal of chargeable assets or fixed assets. What we mean by that is you have an asset. Take for instance, land and building. You have a land. You bought the land 6 years ago. You bought the land 6 years ago at the rate of 2 million naira. So you bought the land 6 years ago at the rate of 2 million naira. So you now want to sell it now. You now sell it at the rate of 8 million naira. You sell it at 8 million naira. It means you have made a gain of 6 million naira. That gain, the law requires that you should pay capital gain tax on it. And capital gain tax is at the rate of 10%. It means you need to pay capital gain tax on 10% of 6 million naira is the capital gain tax, which is CGT that you are going to pay. Do you understand? So when you make a gain, when you are disposing an asset, it means you pay capital gain tax. It means you pay capital gain tax. Land and building is subjected to capital gain tax. Plant and machinery is subjected to capital gain tax. Motor vehicle is subjected to capital gain tax. Goodwill is subjected to capital gain tax. Furniture and fitting is subjected to capital gain tax. So, difference between sales proceeds and cost of acquisition is called capital gain. And 10% of that capital gain is called capital gain tax. So that is that. That is capital.
Question.
Okay, you can
So
go
please,
ahead.
Can you explain the type of assets not subject to tax, like capital gain tax?
Yeah, there are some assets as listed in the Capital Gain Tax Act that is not subjected to capital gain tax. When you receive a gift, you receive an asset by gift, they are not subjected to capital gain tax. Compensation, you receive a compensation for the loss of office that is not exceed 10 million naira. They are not subjected to capital gain tax. So, but our next topic after this class, after this introduction to taxation, will be on capital gain tax. We will discuss it more. We will discuss more on the assets. You will see some of the assets that is not subjected to capital gain tax. So that is that. So another type of tax that we have under direct tax is petroleum profit tax. Petroleum profit tax. Petroleum profit tax. What do we mean by petroleum profit tax? They are the tax imposed on profit derived by upstream petroleum company. Any company that engage in oil prospecting, oil mining, extraction of crude oil, they will pay petroleum profit tax. It's only upstream petroleum companies that will pay petroleum profit tax. Downstream are not expected to pay petroleum profit tax. Downstream will either pay company income tax. So apart from that, the rate of petroleum profit tax depends on the agreement. Petroleum profit tax is like for advanced tax class, it's about 30% of our syllabus or 25% of our syllabus. So my colleague, Mr. Chris, will discuss more on petroleum profit tax. That is his own area. We will discuss more on petroleum profit tax. So for advanced tax, petroleum profit tax is a must because every diet is normally come out in advanced tax. There is no how you miss petroleum profit tax because it's about 30% of the syllabus, 30 to 25%. So it normally come out. So we must pay more attention to petroleum profit tax. So as per the rate of petroleum profit tax, like I said, it depends on the agreement. Under petroleum profit tax, there are different agreements you can enter with the International Oil Company, IOC. It can be profit sharing contract or joint venture or risk sharing. So it depends. But my colleague will discuss more on petroleum profit tax. Another type of direct taxes that we have is education tax. Education tax is a tax imposed on adjusted profit of all companies operated in Nigeria for the purpose of development of tertiary educational institutions, public tertiary educational institutions. What we mean by that is all companies, either oil company or non-oil company, they're expected to pay education tax. And the rate of education tax is 2% of the adjusted profit. 2% of the adjusted profit. So what they are using education tax for, they are using it for construction of capital development of tertiary educational institutions, construction of buildings in universities, polytechnics, and college of education of public only, not private, public only. So government is using this to use that, okay, most of the graduates, they went to public school and they have graduated, they have impacted so much in some of the company. So companies too need to give back by paying education tax. Before, education tax is 2% of adjusted profits. Prior to Financial 2020, education tax is 2% of what? Adjusted profits. Please, you can note it down. That was prior to Finance Act 2020. Finance Act 2020 increased the rate of education tax, which means as from 2021, Finance Act 2021, sorry, increased the rate of education tax to 2.5%. Do you understand? Finance Act 2021 increased the rate of education tax to 2.5%. So it means for accounting year end of 2021, you are going to pay education tax of 2.5% of adjusted profits. And 2022 year end too is still at 2.5%. But last year, which is 2023, we have a new Finance Act 2023. That one too has increased the rate of education tax from 2.5% to 3%. So what that one means is that presently, education tax rate is at the rate of 3%. So what that also means is that for accounting year end that ends 31st of December 2023, the education tax rate that they're going to pay is going to be at 3%. 2024, accounting year end of 2020 is going to be at 3%. So in a question, in an exam, when they give you a question and you are expected to compute education tax, it depends on the year given to you. Assuming you are given year end of 2019, you are going to use 2%. If you are given year end of 2020, you are still going to use 2%. But if you are given year end of 2021, you are going to use 2.5%. Year end of 2022, you are going to use 2.5%. But year end of 2023, you are going to use 3%. So that is on education tax. So that is that. So another type of tax, direct tax that we have is called technology tax. Technology tax. Some refer it as NICTA levy. NICTA levy. The full meaning of NICTA is National Information.
Hello, sir. Can I ask a question, sir?
Hello? I can hear you.
Okay, for the educational tax, is it every company that is meant to pay or selected few?
Every company is going to pay, except small company that their turnover is less than 25 million.
Okay, sir. Thank you. Much appreciated.
Okay, yes. So we can proceed to technology tax. Technology tax is otherwise called NICTA levy. NICTA levy. NICTA levy. It's otherwise called NICTA levy. That is on technology tax. So it's otherwise called NICTA levy. It is imposed. The full meaning of NICTA is called National Information Technology Development Agency. National Information Technology Development Agency. This NICTA levy is imposed on some selected companies. They are imposed on some selected companies. It's not all companies that pay NICTA levy. Some selected companies pay it. Telecommunication company like MTN, Glo, Etisalat, Airtel pay NICTA levy. Financial institution, banks pay NICTA levy. Pension administration, such as pension fund administration, pension fund consultant, pay NICTA levy. Insurance companies too pay NICTA levy. So those are the selected companies that pay NICTA levy. And there are some conditions for paying NICTA levy. The main condition for paying NICTA levy for this selected company is that in a year that they will pay NICTA levy, their turnover must exceed 100 million naira. If their turnover in a particular year is less than 100 million naira, they will not pay NICTA levy. But if their turnover exceeds 100 million naira in a particular year, they will pay NICTA levy. Presently, the rate of NICTA levy, which is technology tax, is 1% of profit before tax. 1% of what? PBT. 1% of profit before tax. That is the rate of NICTA levy. Why they pay NIDA levy? Most of the operation are done through information technology. They are done through information technology. So government want to use this task to develop information technology, because most of these companies, they make use of information technology most. Another company that pay NIDA levy is internet service provider, payment solution company, like Unified Payment System. What do we call this company that this company that do meter? So they pay NIDA levy too. They are because they make use of most of the operation are done through IT. So government use it to develop IT, to do more research on IT, though it's collected direct by FRS. Do you understand? So, like you see now, I've mentioned like 6 types of direct tax. Number 1 I've mentioned is personal income tax. Personal income tax is collected by State Board of Internal Revenue Service. Example of State Board of Internal Revenue Service is LRS. Company income tax is collected by FRS. Capital gain tax depends on who received the capital gain tax profit. If it is company that received the capital gain tax, FRS is going to collect it. If it is individual that make the gains, that make the profit from the capital gain tax, State Board of Internal Revenue will collect it. Petroleum profit tax is collected by FRS. The tax authority that collects petroleum profit tax is FRS. Education tax too is also collected by FRS. While technology tax too is also collected by FIRS. So that is it on direct taxes. Another direct tax that I failed to mention that is not in my study material is called police development levy. Police development levy. Some textbook, they will call it police tax. While some textbook, you see it PDL, police development levy. Police development levy was introduced by Finance Act 2021. Finance Act 2021, and it makes it mandatory for all company in Nigeria to be paying police development levy. It makes it mandatory for all companies in Nigeria to be paying police development levy. Police development levy. Police, your adjusted profit, 0.005% of your adjusted profit. Police development levy, 0.05% of your adjusted profit is police development levy. So we can move to indirect tax now. Indirect tax. Indirect tax are type of taxes imposed on goods and services. Indirect tax, they are the type of taxes imposed on goods and services. They are the type of taxes imposed on what? Goods and services. And what we need to know on indirect taxes is tax shift, because it's shifting from the manufacturer to the wholesaler, from the wholesaler to the retailer, from the retailer to the final consumer. What we mean by that is the final consumer that pay the final burden of indirect tax. Example of indirect tax: custom duties. Custom duties. When you import a good, the custom duty you pay on that good before the good can be cleared at the port is the custom duties. So it's indirect tax. Excise duties too. Some good that was manufactured internally in Nigeria by some foreign company, they pay excise duties on that. So another type of indirect tax that we have is value-added tax. Value-added tax. Value-added tax. value-added tax. Value-added tax is at the rate of 7.5%. It's not 5%. It's at the rate of 7.5%. So when you pay, it's tax paid on consumption of goods and services. When you when you buy goods, the tax that you paid on that good is called value-added tax. It's one of the most common type of indirect tax. It's also collected by Federal Inland Revenue Service. So it's collected by Federal Inland Revenue Service. Another type of indirect tax that we have is stamp duties. Stamp duties. The duty that you paid on a document, or in the transactions to make it a legal binding. It's called stamp duties. When you have a document, maybe memorandum of association, article of association, to make the memorandum of association or article of association, to make it a legal binding, you need to go and pay stamp duties on it. Or you buy a property, you now sign an agreement called deed of an assignment. For that agreement to be a legal binding, you must pay what on it? Stamp duties. Apart from that, we have electronic development levy, electronic transfer levy, which is at the rate of 50 naira for every transactions that exceed 10,000 naira, from 10,000 naira above. We all pay this kind of duties, electronic transfer levy, when we make a transfer from our app, from our bank, and the transfer, the sum is more than 10,000 naira or 10,000 naira above. So bank, they are going to deduct 50 naira. That 50 naira is a stamp duties. It's a stamp duties. That
Electronic transfer levy.
₦50 is a, so that is that. So now we can go to principles of taxation. Principles of taxation. Principles of taxation, in some textbook, they call it canon of taxation. C-A-N-O-N, canon of taxation. While some textbook, they will refer it to attribute of a good tax system. Attribute tax system. Attribute of a good tax system. So they are the canon of taxation. Attribute of a good tax system. Number one principle that we have is principles of conveniency. Principles of conveniency. This principle states that tax must be convenience to the taxpayer. Tax must be convenience to the taxpayer. Tax must be an ability to pay. What this principle also explains is the time for payment of tax and the method of paying tax must be convenient to the taxpayer. In practical application of principles of conveniency is the development made by FRS called tax promas for filing tax return, for payment of tax promas. It has made tax to be convenient to the taxpayer, because taxpayer can file tax at their own convenience, even in their room, in their office. They can file tax. They don't need to come to FRS office again. So tax now is now paperless. Before, prior to introduction of tax promas, if you want to go and file tax return, you need to go and fill some form. FRS will spend some money to print some form. You too, you need to go to, you need to transport yourself to FRS office. Inconveniency. But right now, principles of taxation is with the tax promas, it has made tax to be convenient to taxpayer. Taxpayer can fight tax, they can pay tax at their own convenience through online. It's not necessary they need to go to FRS office. So they can even fight tax during the holiday. They can fight tax during the holiday. So that is the thing. So it has made tax to be convenient for them. That is principles of conveniency. So another principle that we have is principles of simplicity. Principles of simplicity. What this one implies is that tax should be that is easily understand and clear to the taxpayer. Tax should not be ambiguity. There should not be ambiguity in the tax law. Tax should be written in a language that is well understood by taxpayer. What this one in application to these principles of simplicity? If FRS or any tax authority want to make any publication, they should make that publication in the language understood by the taxpayer. So if you are familiar with FRS very well, anytime they want to make any tax policy or publication or notice, they will make the notice in English language, they will make it in Yoruba language, they will make it in Igbo language, they will make it in Hausa language, so that any taxpayer can now say, I don't understand English. That is the reason why I did not do this. So when you make this in English, they cannot use that as a justification. You must ensure that taxpayer, you communicate with the language understood by the taxpayer. That is principles of conveniency. So that is that. Another one, principles of economy. Economy. This is otherwise called principles of cost-benefit analysis. This principle applies to tax authority. It does not apply to taxpayer. Number one principle of conveniency, is referring to taxpayer. Number two is referring to taxpayer. Then this number third, economy, is referring to tax authority. This principle is saying that the cost that we incur in collecting tax should not be more than actual revenue generated from tax. It means benefit that we are deriving from collection of tax as a tax authority, the revenue that we are receiving from collecting tax should be more than the cost we are incurring. We should not be incurring 100 million in collecting tax in a year and we now collect 75 million. It's not economic. Tax should be a profit venture. When we spend 100 million, we should collect 1 billion. So in application of principle of conveniency, federal government normally give FRS a target, and their OPEX, OPEX and CAPEX in FRS as an agency depends on their revenue target. Every year, they would let FRS know that once your operating expenses and your capital expenditure and your recurrent expenditure depends on what you collected. You understand? If you collect every month, if FRS collect 500 million, 10% of that 500 million will be what FRS will be used to run their operation and to do any capital development. You can see that they have given them a target. The more they collect, the more they enjoy. The lesser they collect, the lesser they enjoy. It's principles of economy. Another principle that we have is principles of equity. Principles of what? Equity. There should be fairness. This principle is saying that there should be fairness in collection of tax. Tax should not be sentiment. We should treat taxpayer equal, in an equal manner, irrespective of their tribe or religion or culture. Do you understand? Principles of equity. In this principle of equity, they are trying to let us understand that whether you are Igbo or you are Yoruba, so far as you earn income, you pay the same amount of tax. We should not say, because this one is Igbo, he's staying in Lagos, the kind of tax that he's going to pay should be more than the indigenous of Lagos, which is Yoruba. No, it's not equity. Equity means based on tribe or religion or this. Tax should be based on, are you earning income? What is the rate of income you earn? This is what does the tax law say on this income? What is the rate of tax on it? That is principles of equity. Another principle that we can talk about, principles of tax, certainty. Principles of certainty. Principles of certainty. This principle is saying that the actual amount of tax that should be paid by the taxpayer should be clearly stated. What this principle is referring to the tax authority. He's saying that how you compute the tax should be understood by the taxpayer. The means of computation of tax, the table of computation, the tax rate should be understood. Tax should not be something that they will not say, come and pay 10,000 naira. It's 10,000 naira you pay. How do you arrive at that 10,000 naira is what we need to know. Tell us how you arrive, you tax authority that you are collecting tax. Tell me how you arrive at the 10,000 naira. What are the basis of your computations? What are the basis of your computation? That is principles of certainty. Principles of flexibility. This one is saying that tax system should change in accordance with changes in economic environment. As there is changes in economic environment, tax system too should change. Tax too should change. Tax should not be rigid. Tax should be dynamic. It should be flexible. Sometimes the economy will be friendly. There will be more money in the economy. When there is more money in the economy, we collect more tax. But when the economy is so harsh, businesses are closing down, companies are relocating to other countries, we need to reduce the rate of tax. We need to do what? Give tax incentive, reduce the rate of, so that we can create enabling environment for the taxpayer.
Hello.
I think it's from
Hi.
his network. Hi.
Perhaps his network is hanging.
Okay, network is angling. Sorry for that. Please. Are you back? I'm back now, Abi.
Yes, sir. You
Yes,
can
sir.
proceed, sir.
Okay. Yeah, I'm on principles of flexibility of COVID. During the era of COVID, filing of VAT return is 21 days of following month. Most of the companies, they are in lockdown. You cannot expect them to come and file that VAT return during lockdown. You cannot expect them to come and file VAT return during what? Lockdown. We all know, we all understand what is going on in the economy then. So FRS cannot say any company that does not file the VAT return during that period will pay penalty. No, because companies are not doing business then. We are in lockdown. If 21 days of the return reach, no company will file return then. Because as at then, we have not started using tax promas. Assuming we are using tax promas then, it's still justifiable. But we normally file VAT return using paper then. We go to FRS office to file. So during COVID-19, most of the companies did not file tax return, and FRS did not sanction them. It's flexibility. We understand what is going on in the economy. So that is that. So we can move to the next area, which is called tax system. Tax system. What do we understand by tax system? Tax system is also called tripartite tripartite of tax. Tripartite of tax. Tripartite of tax. How do we look at tax? In what area can we look at tax system? We can look at tax system in three areas: in terms of policy, in terms of law, in terms of administrations. So, policy. First classification of tax system is tax policy. Under the tax system, we have three classification of tax system: tax policy, tax law, and tax administrations. Tax policy, they are the general statements made by government or tax authority on how tax should be carried out in the country. Government can make a policy, FRS can make a policy on how tax should be carried out. It's not a law, it's a policy. Example of a policy is how do we file return? How do we file company income tax return? How do we file personal income tax? There is no law that states how we file it. It's policy. We file company income tax return based on self-assessment scheme. Self-assessment scheme means it is the taxpayer that will file return by himself. You, say for instance, as a company, if you want to file company income tax return, it's the company that will compute the tax that they will pay by themselves and submit and make the payment and submit the account. It's self-assessment. This thing are policy. It's FRA that make the policy that return should be filed on self-assessment scheme. Personal income tax return too is filed based on self-assessment. Company that will compute your tax, your employer will compute your tax and send it to FRS. Do you understand? For FRS, send it to LRS. For the tax authority to know that this assessment return that you filed through self-assessment is true or wrong, is it correct or wrong, is by doing what is called tax audit. FRS will do tax audit to come and checkmate the self-assessment return you have filed. Do you understand? The introduction of tax promas is through tax policy of FRS. Do you understand? It's tax policy of FRS. Extension of filing of tax return. Sometimes FRS can say, take for instance, company income tax return. The timeline for filing is 30th of June of the following year, which is 6 months after the end of the year. After the end of the year, after that 30th of June, some company may not have still filed return. You will see FRS, they will make a newspaper publication that they have give a 60 days day of grace, which means additional 2 months for some company. Because the reason for that is because during that time of filing, the network of tax promas may not be working perfect because of many people want to file return at the same time. So the network will be so slow. The network may not be going. The remitter system may not be going. So FRS will give extension. That extension is tax policy. It's not stated in the law. Do we understand? Are you with me? Are you with me, class?
Yeah, yes, sir.
Okay, nice. So there are tax policy, tax law, the law made by government on how tax should be carried out. Example of tax law: Personal Income Tax Act, Company Income Tax Act, Petroleum Profit Tax Act, Capital Gain Tax Act, Value Added Tax Act, Education Tax Act, Stamp Duty Act. They are all tax law. This law is amended from time to time. Do you understand? This law is amended from time to time. But right now, if government want to amend this law, they amend this law through introduction of another act called Finance Act. Finance Act, they can use Finance Act to amend all these law mentioned together. You understand? For them to be amending it one by one, it will take time. But Finance Act can amend all this law, because Finance Act, we talk about company income tax, we talk about personal income tax, we talk about capital tax, you understand? Value added tax, education tax. In Finance Act, all this law I mentioned is under Finance Act. You understand? Finance Act has something to say on company income tax. Finance Act has something to say on capital gain tax. Anytime they want to make the amendment to all this act now, they make it through what is called Finance Act. So right now, we have Finance Act 2020, we have Finance Act 2021, we have Finance Act 2023. Do you understand? So that is the thing. So another one is tax administration. Tax administration. Tax administration means the organs that collect the tax, that administer the tax law. All these tax law we mentioned, tax policy, who administer it, who carry out the operation of it, who effect it. They are the tax authority. They are the one that administer it. They are the one that ensure that the tax law is being followed. They are the one that ensure that there is tax compliance. So they are the tax administration. Tax administration means the organs that administer the tax law. Federal Inland Revenue are tax administration. State Board of Internal Revenue are tax administration. Local Government Revenue Committee, they are tax administrations. They are the one that administer. Anytime there is a tax law, there must be a body that will administer it, that will enforce it, that will ensure that people follow it. Joint Tax Board, they are tax administration. Joint Tax Board is harmonization of all tax authority together. Federal and State Board of Internal Revenue. You understand? They are the ones that combine together that make Joint Tax Board. The primary responsibility of JTB is to issue unified tax identification number. Is to issue what? Unified tax identification number. What we mean by that is that Federal Tax Authority want us to have a unified tax identification number. As an individual, I reside in Lagos. I pay my tax in Lagos. We have other person that reside in Ogun State that pay his tax in Ogun State. If that person now relocate to Lagos, Lagos has to issue another tax identification number to him. Do you understand? He will start paying tax in Lagos. But what JTB is trying to achieve, that in the short run they will still achieve, that is to ensure that there's a unique tax identification number, so that if you go to any state, you can use that tax identification number. Take for instance, if I'm living in Ogun State before, I'm paying my tax in Ogun State, I'm now related to Lagos. The same tax ID I use in Ogun State, I should be able to use it in Lagos State, assuming it's used to me by JTB. So that is what JTB is trying to work on. So that is that. So tax administration. So under this, we need to look at power to administer various taxes. Under this, we are talking about fiscal federalism. Fiscal federalism means what authority each tiers of government have to collect tax. What kind of tax each tiers of government can collect? What kind of tax federal government can collect? What kind of tax state government can collect? What kind of tax local government can collect? It's called fiscal policy. That is 1.7. 1.7. Power to administer various taxes. So that is that. So we look at it under number one, taxes collected by federal government. Taxes collected collected by federal government? What kind of tax federal government collected? So federal government, what kind of tax they collected? Number one, taxes collected by federal government. What we mean by that is Federal Inland Revenue Service. The tax authority under federal government, they are Federal Inland Revenue Service, Nigeria Customs Service, FAN, all those revenue collection agencies under federal government. What type of taxes that they collected? Company income tax, petroleum profit tax, education tax, value added tax, capital gain tax on corporates and non-residents, stamp duties on body corporates. All these are collected by what? Federal government. Custom duties too is collected by federal government. Excise duties too is collected by federal government. So all these are the taxes collected by federal government. Taxes collected by state government. Personal income tax, which is payee. Personal income tax is divided into two. It's either payee or direct assessment. Payee means pay as you earn. Payee means if you are under employment, you will call your personal income tax as payee. It means your employer, as your employer is paying you your salary, your employer will deduct it. Why direct assessment? Direct assessment means you are working on your own. You are a sole proprietorship, or you are a partnership, or you are a professional. You are on your own. You are not under anybody. You are going to pay a personal income tax called direct assessment. Capital gain tax for individual is also collected by state. Road taxes is also collected by state. Business premises is collected by state too. Business premises, LRS collects it. State Board of Internal Revenue collects it. For a new company, it's 10,000 naira. Why for an existing company, it's 5,000 naira. What we mean by that, every year, company normally pay business premises to Lagos State Internal Revenue Service, which is State Board of Internal Revenue Service, which is 5,000 naira annually. Existing company, if that company is a new company, it will be 10,000 naira. Development levy is paid per your employee, 100 naira per employee. Company also pay this on behalf of the employee, 100 naira for each of the employee. This 100 naira has been long that they have been collecting it. It has been long. So I read the news last week. Some people are saying that this development levy need to be reviewed because of time value of money. Because of what? Time value of money. This 100 naira that have been collecting it for over 15 years. Is it what 100 naira can buy 15 years ago can buy now? So some of the tax experts are saying, this is development levy now, by now, should have been like 1,000 naira or 5 or 10 or 3,000 naira for each of the employee, because it has been long that they have been paying the 100 naira. Another type of taxes collected by states is right of occupancy, which is certificate of occupancy, is collected by states. Market taxes is collected by states. Consumption tax is collected by states. Some states collect consumption tax. Consumption tax is like value-added tax. Lagos State are the first state that initiated collection of consumption tax, and is at the rate of 5% of any good that you buy in restaurants, in any restaurant or any eatery or any mall, anything that have to do with consumptions. So it's 5%. So as we are now, about 16 states have been collecting consumption tax. So we have entertainment tax. entertainment tax. Anytime you went to cinema to go and watch movie, that fee you pay to watch the movie, there is a tax on it that is being collected by states. It's called entertainment tax. Entertainment tax. Like all this movie that was displayed during the December, Tribe of Judah, this and this, this and this. Lagos State to earn revenue from it, from the cinema. And it's automated. As they are giving you tickets, if you watch very well, you will see that they will deduct, they will add the entertainment tax. And as you pay through your POS, through your ATM card, Lagos State will collect their own tax immediately because the system is automated already. So it's entertainment tax. Those are the kind of taxes collected by states. What are the taxes collected by local governments? Shop and kiosk rates, tenement rates, naming of streets, marriage certificates, death certificates, slaughter slab. All these are collected by what? Local government. There was about 3 diets ago or 4 diets ago, 15-mark question was asked in advanced level. That's what do we should explain what is called tax administration and the taxing rights, 15 mark. We should explain the concept of tax administration or fiscal federalism and the taxing mark. I think the question came out in November 2021. November 2021 or May 2021. So what the question is saying that you should explain each of the tax administration we have. It's a 15-mark question. You need to tell them we have a federal inland revenue. They are the ones that collect and administer federal taxes. We have State Board of Internal Revenue. They are the ones that collect they are the ones that collect and administer state taxes. And we have local government local government revenue committee. They are the ones that collect local government taxes. And you give an example of each of the taxes collected by each tiers of government. It's a 15-mark. It come out. So this introductory tax, at least 10-mark question normally come out from advanced level. So we need to take note of that. We need to take note of that very well. So 1.8, which is problems and challenges of taxation in Nigeria. What are the problems or challenges of taxation in Nigeria? This area is very important to us. It's also important to us. In most of your past questions, you should review your past question very well. Every 3 diet, a question normally come up relating to problem or challenges of taxation in Nigeria. Because it's a question that requires solutions and that is affecting the countries. It's a practical question that is affecting the country. What are the problems or challenges of taxation in Nigeria? One day, it was asked that, what are the problems faced by government in collecting taxes? You understand? Number one problem, poor tax administration. Poor what? Tax administration. The tax administration that we have, they are not doing good work, which is the FRS, the LRS. They don't have the manpower. They don't have enough manpower, number one, under this poor tax administration. Secondly, they don't have the adequate tax knowledge on how to administer tax. You understand? Another reason for this poor tax administration can be because the remuneration paid to them is very poor, or they are not well motivated, can result into poor tax administrations. So are you with me? Are you
Yes,
with
sir.
me?
We are with you, sir.
Okay.
Yes, sir.
Yeah. Another problems or challenges of taxations we have is multiplicities of taxation. Multiplicities of what? Taxation. This one is called multiple taxes. Multiple taxes. We are still coming to a topic that we are going to discuss multiple taxes. Multiple taxes. Under that, you know different type of multiple taxes that we have. What are the problems of multiple taxes? Multiplicity taxation or multiple taxes means that a situation whereby a taxpayer pay different pay more than one taxes on the same income. You understand? Multiple taxes means different tiers of government are collecting taxes on one particular income. Federal government collect, you earn an income. Take for instance, you earn 200,000 naira. Federal government collect tax on it. State government collect tax on it. Local government collect tax on it. That one has become multiple taxes. You are paying different taxes on the same income at once. It's called multiple taxes. How can we be paying multiple taxes? There should be harmonization of taxes. If you want to collect tax and swans and let the taxpayer rest, it's not that on this income that this person earn, the taxpayer earn, federal government will come, he will collect his own, state will collect his own, local government collect one. Typical example of multiple taxes. When you import a goods, you import a container of goods. At the port, you pay custom duties. Custom duties go to federal government. When custom clear you and the good is moving out from the port in Apapa, as the good is moving out like this, it's going to Apapa Street. You will see a local state government official. They will say they want to collect ecological taxes from from you because of the container. Normally, the container that carry the goods is very dangerous to the environment due to the smoke. They will collect ecological taxes from all the container that move out from the Apapa. When you are going and you move to your area, you want to discharge the good, the container from the you want to offload the good. You will see a local government official out. They will come. Owo Wada, and this, I'm from local government. They will come and collect tax again. That one is called multiple taxes. On the same income, you can see how you pay tax in different area. Example, another examples of multiple taxes, road taxes. Road, you pay for roadworthiness, you pay for driving license, you pay for this, you pay for tracking. State will come with their own too. Come and pay for state driving license. They call it state something. You understand? You also pay sometimes for local government too will come. Assuming you are into commercial buses, they will come and pay. It's called multiple taxes. It's one of the challenges of taxation in Nigeria. Another challenges of taxation in Nigeria, lack of accountability of tax revenue and expenditures. Lack of what? Accountability of tax revenue and expenditure. Government cannot account for the revenue they are collecting from taxes. They cannot account for it. They can't give proper account of it. It's challenges. Another one, lack of public enlightenment or sensitization. Do you understand? But instead of using lack, I want us to use poor poor public enlightenment and sensitization. Poor public enlightenment and sensitization. Government is not doing enough awareness and sensitization about tax collection. People don't know the importance of tax. People don't know existence of tax. That is the reason why we have a lot of people in Nigeria earning income and not paying tax. Do you understand? A lot of people earning income and not paying tax. One of my write-up, one of my recommendations I made to government is, government, see, we don't need to be adding more taxes again. Police development levy, the technology tax, this tax, or increasing the tax rate. No. What we need to do for us to increase tax revenue is to widen the tax net. To widen what? The tax net. We need to widen more people. We need to put more people in the tax net. How do we put more people in tax net? I can tell you categorically, for those people earning income in Nigeria, only 30% of those who are earning income are paying tax. Why those 30%? Because they are in a paid employment. Those in the informal sector that are doing business have their own shop, that have their own shop, that are doing, that have their own workmanship, mechanic, bricklayer, furnishers, fashion designer. All these kind of people, they are not paying tax. They are the informal sector. They are the ones that are not paying tax. What government can do is to widen the tax net. How can we put these people into the tax net? One of the techniques, one of the measures government can use to widen the tax net by ensuring that those people, they are in the tax net, by ensuring that mandatory use of TIN number for operating of bank account. If government make it mandatory that if you want to have a bank account as an individual, for company now, they have made it mandatory that before you can open a current account for company, you must have what? Tax identification number for your company. You cannot open an account for your company in the bank now without your tax identification number as a company. But for individuals too, most of these people, they have a bank account. Government should make a notice that they are giving all individuals that have a bank account within 90 days that you should go and register for tax, TIN number. That without a TIN number, you will not operate your account will be lame. You will see more people will come into the tax nets because there is a poor sensitization or enlightenment. People are not enlightened on development of tax. That is the reason. It's a challenges of a taxation. Another one, high level of corruption. This one, bribery and corruption, we can call it bribery and corruption of the tax official. This one is referring to the tax official, the tax authority themselves. The level of bribery and corruption is affecting tax. Take for instance, FRS. They will say, okay, this is your assessment. When they do tax audit, they give you an assessment of 100 billion naira. They know that you are supposed to pay this 100 million. At the end of the day, they will say, come to negotiation table. The end result of the negotiation table is that give us PR of 40 million naira, give us PR of 30 million naira, go and pay 20 million naira into government purse. Bribery and corruption. It's affecting government. It's affecting tax. It's reducing government revenue. Tax officials, they are very corrupt. They receive bribe. They are human beings. They are drinking from Nigeria water. You understand? They are living in Nigeria environment. Them too, they want to live in high-level life. Bribery and corruptions. Another challenges of taxation in Nigeria is over-dependence on oil revenue. This one is a challenge for over some time. But right now, it's not one of the major challenges of Nigeria. There was a time, like 10 years ago, Nigeria solely depend on oil revenue. Our major, if you look at Nigeria budget, major revenue coming from oil, crude oil, sales of crude oil. We don't do any development on how can we generate more money from tax. we just solely depend on oil. What if the stream dry? When the stream dry, what does Nigeria will live on? Even as at now, it's still affecting us. In our budgets, about 35% of the revenue is coming from crude oil. If the stream dry, let's develop our tax system. Let's develop our tax system. Let's invite foreign investors. Let's encourage foreign direct investment. Let's close our eyes from oil. One day, oil will not be important again. You understand? In some other country now, they are using fuelless car, electric car. They are no more using petroleum car again because of carbon dioxide. They said the side effect of smoke is affecting the ozone layer. You understand? So they are using that. So over dependence of oil is affecting tax in Nigeria. Another one which I failed to mention here is poor value for money. Poor value for money of tax collected. Poor value for money. It's not in my part here, but it's the challenges of tax. People believe that they are not seeing value from the little tax that they are paying to government. So why are we paying tax? So it discourages people from paying further tax again. After all, what are they using the money for? Upon all the taxes they are collected, see where we still are. No road, poor road, lack of good health system, poor security.
No evidence.
You understand?
Mhm.
You can.
No evidence.
So there is some people's school of thought that poor value for money. Citizens are not seeing the value of the tax system that they are collecting. So that is challenges of tax system in Nigeria. So we move to 1.9. We move to 1.9. So our 1.9 is talking about concept of tax identification number and tax clearance certificate. Concept of what? Tax identification number and tax clearance certificate. Concept of tax identification number and tax clearance certificate. What do you understand by tax identification number? Tax identification number is a unique digital number issued to taxpayer or allocated by taxpayer by the tax authority, serving as a means for registration of tax. One of the means, if you want to register for tax, one of the evidence that you have registered for tax, either company or individual, is by giving you tax identification number. Tax identification number. Tax identification number. After you apply for registration for tax authority will issue you what is called what? Tax identification number. What is the objective? Why the tax authority issue tax identification number? Creating closer linkage between tax authority in Nigeria is one of the objectives. Another objective, aid cooperation and sharing information among the tax authority. While other objective is increasing revenue generation for all tiers of government. By the time everybody have tax identification number, by one way or the other, they will pay tax. They will do what? Pay tax. Take for instance now, those who have a bank account that don't have tax identification number, if federal government give them 30 days that go and get us identification number. If they don't get, they can they can suspend their accounts or ensure that they charge them from penalties. But by the time everybody gets tax identification number, tax authority can have information about that taxpayer. If that taxpayer earn an income and he did not pay tax authority can trace the taxpayer. You understand? In abroad, the tax system is digital. In Nigeria too, we are coming to digital taxation. The tax system is digital. As you earn income in abroad, as you are earning the income, as they are crediting your bank account when you earn an income like this, the next debit alert you see is tax, different kind of taxes. Do you understand? Different kind of taxes. So in abroad, the tax authority and the banks, they work hand in hand together. So anytime you receive an income, as you receive an alert, the next debit is appropriate taxes. So there is nowhere you can run to. You understand? So that is the reason why many people they are saying, I want to travel, I want to Japa, I want to Japa. The country that you are going to, they develop it through tax system. Are you paying tax in Nigeria? So you need to contribute your quotas. So that is objective of tax identification number. You need to register for tax. For a company, it is mandatory for them that within 6 months after commencement of business, they are expected to register for tax. If a company registers, they are to commence the business. Within 6 months after commencement, they are expected to register for tax. They'll go and register with Federal Inland Revenue Service. And if a company wants to register for tax, what are the requirements for registration for tax? What are the requirements for registration for tax? If a company wants to register for tax, requirement for registration for tax for company. Number one requirement, the company must fill a duly completed application form. A duly completed application form. There's a form that will be given to you by FRS. It's called company registration form. It's one of the requirements. Do you understand? Another requirement, the name of the company, the register office of the company. Another key requirement for registration for tax under FRS is copy of certificate of incorporation. Copy of certificate of what? Incorporation. Copy, certified copy of memorandum and article of associations too is required for registration for tax under FRS. Name and address of the auditors too is required, and the bankers is required. The name and address of the directors too is one of the requirements of registration for tax. Date of commencement of business and accounting year end of the company is also required. The principal officer of the company, the shareholding structures of the company is also required. So all these are required for registration for tax under FIRS. For personal income tax, if they want to register any employee for tax, what they just need is the name of the employee, and the BVN of the employee is also needed. And the NIN too is also needed for personal income tax. If you want to register for personal income tax, for you to have your TIN number under personal income tax as an individual. Take for instance, you just join a new company and you have not been paying tax before. You don't have a tax ID. Under personal income tax, it's called taxpayer ID. TIN number is called taxpayer ID. Do you understand? Taxpayer ID. If you don't have taxpayer ID, you are just a new staff. Maybe you just finished your ISC, you have not been paying tax before. If they want to register you newly, they will need your NIN, your name, your NIN, your house address, and your BVN. And your phone number is needed for personal income tax. So that is that. What are the transactions that we require tax identification number? What are the transactions that if you want to do in Nigeria, they will be asking you, go and bring your tax identification number. Go and bring your evidence of registration for open of corporate bank account. Open what? Of corporate bank account. If a bank want to open, if a company want to open a corporate bank account in the bank, you want to open a bank account. As a new company, if you want to open a bank account, they must ask for your TIN number. As an existing company too, you must provide your TIN number. It's a mandatory now. It's mandatory now. Another one is all transactions with other companies involving invoices, statement, and return. Another one, correspondence with government or other government agency. You want to make any payment to government or other government agency as a company, you will be required for evidence of your registration for tax. Or you want to do business with government. You have a business that you want to do with them. You require. Another one that will require for registration for tax, payment of custom duties or import duties. You import a good as a company and you want to clear the good at the port. You want to pay custom duties on it. Custom will ask you as a company, go and bring your first thing that they will ask you before any payment can be made. Go and bring your evidence of registration for tax. We need your TIN number. For you to make the payment, it's through your TIN number you will make it. Obtaining receipt for tax payment, you pay a tax. Maybe you pay withholding tax, you pay this. For you to get the receipt, you must pay, you must have your TIN number. Application for tax clearance certificate. You want to get tax clearance certificate, you must get, before you can be issued a tax clearance certificate, you must have a TIN number. It's a must. It's a must. You must have TIN number. It's very compulsory. So there's no how you can deal with that without a TIN number. It's very compulsory. Bidding for government contracts too. You must have TIN number. So those are the transactions that you will do that we require for TIN number. Now, another one is another concept that we want to look at is tax clearance certificate. Tax clearance certificate. What do we understand by tax clearance certificate? What do we understand by tax clearance certificate? Tax clearance certificate. Tax clearance certificate. Tax clearance certificate is a document issued by relevant tax authority, either Federal Inland Revenue or State Board of Internal Revenue Service, to a taxpayer, serving as an evidence that all tax due have been paid by the taxpayer. It's serving as that. It's serving as an evidence that that taxpayer has not, it does not have any tax issues. Either it means he has filed all his return up to date. He has made all his payments up to date. And he has been cleared from tax audit. Do you understand? That is tax clearance certificate. Every year, tax authority normally issue tax clearance certificate to taxpayer, especially company. And this tax clearance certificate, it will show your tax report, your tax history in the last 3 years. In the last what? 3 years. Take for instance, we are in 2024. This 2024 tax clearance certificate is going to show your tax you paid in 2020, tax you paid in 2021, and tax you paid in 2022. It will not show 2023 tax because at this time that they are giving tax clearance certificate now, most of the companies, they have not prepared the audited account that they will say they want to pay their 2023 tax. No. 2024 tax clearance certificate, we only show report of 2020, 2021, and 2022. It will not show 2023 because there is no how it will show 2023 because as at this time, we have not known the amount of tax the company will pay. Okay? This period now is when company they will start auditing company. They don't know the actual tax they will pay now. And this tax clearance certificate runs from January to December. It's just for 1 year.
So I barely hear you from my end.
Huh?
I barely hear you.
Okay, you barely hear me.
Yeah, I can hear you now.
Okay. The tax clearance certificate runs from January to December. It runs for what? January to December. It means every 31st of December, tax clearance certificate will expire. 2023 tax clearance certificate has expired 31st of December 2023. A new one will be issued this year called 2024 tax clearance certificate. It's only company that apply for tax clearance certificate most. Though, as an individual too, under personal income tax, you can request for tax clearance certificate. Can you hear me? Hello?
Can hear you, sir.
Okay.
But sir, how long will it take them to prepare my tax clearance certificate as an individual working for a company?
Oh, as an individual working for a company, your tax clearance certificate, if your company has been paying your tax regularly, supposed to be out within 2 working days. 2 working days.
Okay.
Yes.
Monthly. Okay. Can I get it monthly or annually? Which of them?
Annually. It's annually.
Okay.
You get.
Okay, 2 working days. Okay, sir.
Yes. So now let's look at content of tax clearance certificate. This content we want to mention, we are referring to company tax clearance certificate. Company tax clearance certificate. Are you with me? Company tax clearance certificate. What are the content of tax clearance certificate issued by FRS to company? Number 1 content of tax clearance certificate is tax identification number of the tax of the company. Tax identification number of the company. That is number 1 content of tax clearance certificate. Why number 2 content is name and address of the company. The name and address of the company. Followed by taxable profit of the company or total profit of the company. Why followed by tax payable. Another one is tax paid. Another one is what? Tax paid. That is another content of tax clearance certificate. Why we have tax outstanding, if any. Sometimes it's not necessary that giving you tax clearance certificate means you have paid all your taxes finished. You may have an arrangement with FRS that I want my tax is 100 million naira, but I will pay 50 million naira, but I need tax clearance certificate. Give me tax clearance certificate. And you will do an undertaking when to pay the balance. They can issue you tax clearance certificate. the nature of business of the company, the expiring date of the tax clearance certificate, the type of assessment. The last one that is not here is name and designation of the authorizing official. Somebody in the FRS must authorize that tax clearance certificate. And for FRS, the only person that have authority to authorize a tax clearance certificate is tax controller, which is the head of the taxation. The tax controller. The name of that tax controller. So that is that. So what are the transactions that will require tax clearance certificate? What are the transactions that will require tax clearance certificate? What are those transactions that required tax clearance certificate? Application. Yes, sir. Meeting. So application for approval of building plan. Application for approval of building plan. If you want to build, you want to start building, you own the land, you want to start building on it, especially in Lagos State. You want to start building on it. Before they can give you a building plan, you need to provide your tax clearance certificates. How can you have the money to build a house without paying your tax? You must be a good taxpayer before you start building. So before they can approve your building plan, you must provide evidence of your tax clearance certificate. Application for government loan. You need a government loan. You need a loan from Bank of Industry, Federal Mortgage Bank, this and this, etc. You must provide your evidence of tax clearance certificate. That is your evidence of tax clearance certificate. That evidence will show that you're a good citizen. Application for trade license. Application for trade license. Application for award of contract by government. Application for award of contract by government. Application for certificate of occupancy. Application for certificate of occupancy is also needed. Are you with me?
Yes, sir.
Application for foreign exchange transactions. Application for export license. Application for plot of land. All these are the transactions that is needed for tax clearance certificate. Application for increase in share capital. They are the transactions that, if you want to do, they will need your tax clearance certificate. For an individual, last year, CBN make it mandatory that if you want to do some foreign transactions, you will need tax clearance certificate. If you want to pay school fees, payment of school fees through foreign currency, you need foreign currency. You need a dollar. You want to purchase a dollar at the official rate to pay your school fees. you provide your tax clearance certificate. Payment for upkeeping. You want to send upkeeping to your children in abroad. You provide your tax clearance certificate. Payment of traveling allowance, personal traveling allowance, PTA, business traveling allowance, medical bill payments are required for tax clearance certificates. They are required for tax certificate for individual. So that is that. So we are through with the introduction to tax. We are through with introduction to tax. So any question, any observation? So for our next class, I will ensure that every area I'm discussing, I will share it on. So please, my laptop is doing anyhow. That is the reason why I cannot share it very well. So please, so that is that. In case of any question, so let's know on that. So if you have any questions.
Okay, so mine is not a question. I think I've asked some few questions during the class section. So I don't know if we're recording the lectures.
Recording the lecture.
Yes, sir.
Okay.
And then secondly, I think we need a WhatsApp section for tax classes.
We have a WhatsApp section for tax now.
I'm not there. I was not able to access. I have not seen the material. I was not able to access the material. I think they need to add me there.
Okay,
so,
okay. I will ensure that you are added. But other students, can you see the material?
Yes, I will send the materials.
Yes, sir.
Okay. So please, I will ensure that you are added and you see the material. And presently, the lecture is being recorded. So, this is the first time, but our next lecture will improve more. We improve more on this. So our next lectures, we improve more and we do more on calculations. So by our next lecture will be on capital gain tax. So that capital gain tax will require a lot of calculations, a lot of working notes, this and this. So we do on that. So, but being the first day of our lectures, so that is the reason why we said we should do introduction to class. So, and I will advise us for advanced tasks. We have a lot to discuss. Apart from this time, we can fix additional 30 minutes lecture if we have the time, maybe during the week or Sundays. So, because the more we do lecture, the more we understand. So I'm just taking this as a suggestions. So, yes, and the purpose of creating the WhatsApp section, in case you have any questions, any observations, you can ask your question and I will answer by WhatsApp so that other students too can benefit. So you are free to ask your question, either you send voice message or you type and I will respond. Do you understand? So, I will ensure that our materials, we get our material 2 days before the lectures so that you can go through it, so that when we are discussing it, you will be familiar with it. So that is that. So do we have any observations, any notice, any questions?
Yes, sir.
Hello, sir. Good
Yeah, I
morning.
can hear you.
I've not been added to in the WhatsApp platform, Mr. Matthew.
What do you say?
I've not been added to the WhatsApp platform.
Oh, you have not been added to the WhatsApp. Okay.
Yeah.
Do you receive the first lecture from Mr. Chris?
No.
Okay, you are just joining. Yes.
Yeah, this
So after the section, okay, this is your first time.
Yes.
Okay. So you can, my number, you can write my number, I will add you. So you can note my number down. My number is 080
All right.
76
76
22 69
9
67.
0
So
8
my
0
name, yes, 76,
22
yes,
69
yes,
67.
67, yes. Mr.
Thank
Tunde
you.
Idris.
All right. Thank you, sir.
Yeah. So, and again, we'll be doing some assignments. No, this is an online lecture. So I will give out an assignment. You send it to me via WhatsApp. So you snap and send it to me and mark. Because in tasks, especially the calculation area, the more we solve, the more we know. Do you understand? So take for instance, when we do the capital gain task, if I solve like 4 questions, I will give you an assignment, some area, you go and solve it. Each of you send your answer to me via WhatsApp. So I will review and mark. I can tell you the area that you need to improve, what you need to do. So that is the thing. So to me, online lecture is even more interesting than the physical lecture, because you can contact your lecturer at any time if you have an issues. So that is the thing. So thank you very much. Any other
Excuse me, sir.
questions?
Yes, sir.
Yeah.
Please, is it possible to make the recording available in the group now? Like immediately after the class? For those of
Yes.
us that were not studying.
Oh, yes. It's admin. There's an admin. So I will talk with the admin if they give the approval, so that for those of you who cannot hear, they will send it to the group. So I think I'm sure admin, they are aware of that, and they will do that.
They usually send it late, sir, like a day or 2 days after. I don't think it's actually good that way.
Okay.
Yes, sir.
So your observation is noted. I will get across with them. I will ensure I will talk to them that they need to send it as early as possible. So as
Thank
early
you,
as
sir.
possible. Yeah. Thank you very much.
Thank you.
So no problem. So for today, we can round up being the first time. So by next week, we continue. So thank you very much.